Dark pools. Dark pools is
Dark side.
the dark side, yeah, as it's called in the industry, alternative trader systems or alternative trade systems. It makes up quite a big piece of the pie and exists of mostly retail or sometimes called household in the US, along with some market makers, liquidity providers, and dark pool liquidity. The chances are that when you're executing on a cash account that your order is routed via the dark pool. In terms of retail, that's why you all sit on the dark side. The point is that these dark pools exist only for institutions to cross match buy side and sell side orders. The reason they do this is to be anonymous of what they're executing. So if you look at level 2, for example, you will have orders sitting there on level 2 that you can see. If you're in a dark pool, those orders are not going to be visible. Secondly, the time and sales that you see, if you've got a standard setup in your time and sales, you would be able to see your buyers and sellers. Here's time and sales going through on Tesla. And you can see these orders are filtered through. Now, the difference is if you look at level 2 and it's saying there's 500 sitting at 185.17, that doesn't necessarily mean they will appear on the time and sales, right? So you could pull that order on the level 2 or that order could get filled. If the order gets pulled, it won't appear on time and sales. If the orders get filled, it will appear on time and sales because it was visible on the level 2. It will be blue or red, depending on whether it was a buy or a sell at that time. Everything else is filled in between. Those in between orders are only orders that can get filled on a dark pool. So if you look at the way that I'm working here with the buy side pools, that's exactly what I'm trying to target, is those midpoint entries that come in. That's when the tape changes. So if you to look at this and say, well, actually I can see the reds and the blues as general visible buy and sell sides. Everything else that prints off this tape in white is in between the bid and ask and is probably coming from a dark side pool. So even though they don't have to visibly show you that amount before they're entering it, those orders will be hidden, but they have to then divulge that they've done them. And that happens pretty instantaneously. There'll be a microsecond delay before that gets printed on the tape, but that's what I look for. So I'm looking for the tape to speed up with bigger orders to identify that dark pool liquidity. And tomorrow, when we're going to go into this a little bit further, you'll understand why I particularly look for that. But I think the terms of order that you would look at, you'll be used with a limit order, a stop order. The type of orders that you can place on a dark liquidity pool are conditional orders. Yeah, it's not just a limit order to sell at X price. You can have conditional orders where you can dictate exactly what kind of order you want to execute. For example, if I was a big player and I was worried that people, other players or hedge funds were trying to front run me when I'm putting huge orders into the market, then perhaps I would actually put a conditional order in to say, okay, I want the national bid price on this, but actually I want you to delay me by 350 milliseconds. I want you to add latency to my orders so they can't be front run. So all these institutions get very, very specific conditional orders that they can use. And this is where the term algorithm is kind of coined. And yes, of course, there are algos in the market, and it is algorithms that run huge institutional orders in order to, you couldn't give a client's order 350 milliseconds of latency without an algorithm running that for you. It's just not possible to do as a human. So a whole lot of orders going into this dark pool, but it's the amount, it's just over 50%. And we're in it as retail traders. That's the issue, right? They get such a discount on placing huge volume through these venues. The cost is negligible compared to what you would pay executing on an exchange. So we do think that our orders are going through exchange. We will pay the exchange fees. We will pay those routing fees. But actually, there's a much cheaper way of doing it. But unfortunately, we can't get access to those pools. Now, just to take a look, so that if we look at the SEC, so the SEC is kind of like trying to make sure this is all legit, right? The dark pool pools are legit, and they're perfectly legal, by the way, as a service for institutions. So if we look at the SEC, and I'm going to look for those ATN, like I said, they're called alternative trading systems, and then I want the N is the form that they have to publish. And if we come here on the SEC website, look, here they are. So the one that I used to have when I was at Credit Suisse, which will be no longer because obviously it was taken over, was Crossfinder. So Credit Suisse had Crossfinder. That was its dark pool. And sometimes if you was a retail player, your broker would choose whether or not it wants to route its orders directly to exchange or cheaper to a dark pool liquidity provider. And in which case you could get a better feel whilst doing this. But there are lots, I think there's about 30 of these guys in the market or so. Bids Trading is quite a well-known one. But yeah, BNP, Paribas got one, BNP's got one, Citi's got one. They've all got one. You know, it's all called, different names for their institutional. JP Morgan's got two here. There's plenty of providers that are out there. It is legal, but I think tomorrow we'll delve in a little bit more about it onto those types of conditional orders that can be placed and have a look at some of the guidelines set out as part of this dark pool. See if we can't shed a bit of light on the dark pool for us retail traders now.
All right, great recap there, Scott. And definitely dark pools is something that is not talked about often. So definitely smash the like if you guys enjoy us touching a space that usually just doesn't even get talked about. So definitely for those new traders, look into it, understand it so that you can understand how order flow works. And I always say this, Scott, that everyone was super happy about free commissions, right? Well, the truth is that nothing in life is free, right? There's always somebody paying it somewhere. So definitely with free commissions, yes, we got more order flow, but to me, that was high frequency trading, right? And high frequency trading is a good thing, but can also be a negative when they have advantages of using things like the dark pools, right? To get bigger orders through when we're stuck, showing our hand, essentially. It's kind of like playing poker and your hand is flipped open.
Yep.
That's literally what it's like, guys. It's like playing poker, but the dealer can see what you have.
The high frequency trading has made the market absolutely more efficient. So, it's pretty good for the market, wanting an efficient market, but sometimes it's the inefficiencies that create the reward for us and the volatility. So there's less of that about when those kind of algorithms are running in those pools. But that's why I focus on trying to get in with those pools as to fighting them. And the way I find that easier to do is just keep tracking them as we go throughout the session or on a bigger time frame.